Hello, everybody, and welcome to our second episode of Golden Opportunities with your host, James Donnelly, President, CEO of Safe Haven Insurance, your insurance safe place. See, I slurred again. Your insurance safe place. I feel like I was drunk for a second. And my co-host, Jonathan Silberstein. Jonathan?
How are you, everyone? Welcome. We are excited. We're going to be talking about a really interesting topic today. We are well versed in this, and it's something that I think most people will actually get some benefit, and it is health insurance.
I don't know if we could bang like that. Can we bang like that?
I don't know. Well, we'll find out.
Well, first off, I want to just acknowledge our new props, right? We got some new props today.
Yes, we do.
We don't look like we're like in a hospital with a white table and a white wall, you know. We got some plants. We're producing some oxygen. You got some oxygen right there coming off you. Yeah, right? Exactly. We got a little sailboat, right? And just for the record, this is a trophy I won at a game. It's Minute to Win It was the game.
Right.
And it's I was the 2024 Crybaby of the Year. So apparently I was a crybaby during that. But it's a pretty cool statue.
I think
Jacob Hoffman has one on his desk.
Oh,
it's a man thinking. Okay. So I thought it was pretty funny. So I brought this in because I swapped it out one day with his trophy. But yes, so again, I just want to thank our production team here at Web Growth, Craig Escobar and Alex Gambino. Pratik is our sound and video guy, so I want to give them a shout out. Thank you guys. Again, I want to thank our sponsors, 516 Ads, 631 Ads, David Gusson, Jimmy Caraco from Smash Hit Media, and Cliff Flager from BXB. You and I met actually in 516 Ads, one of his business networking events, and then from there we met Cliff Flager. I did not meet Jimmy there. Jimmy has his own networking group, and you and I kind of overlapped there as well, right? So exactly. All four of those guys, great teammates. Craig Escobar's an amazing teammate. Jimmy, David Gusson, oh my God, David Gusson's awesome. Cliff is great. They're growing. So if you guys have a small business in the area, if you have a business in the area, definitely reach out to David Gusson, 516-631-ADS, and Cliff Flager, BXB. And then
BXBpros.com.
BXBpros.com. You got it down pat. I don't even have it.
I'm an ambassador.
You are an ambassador. Wow, that's impressive. All right. And Jimmy handles my social media, all my graphics. He's amazing. So I just want to give a shout out to all those guys. Thank you for believing in us and helping us get to where we are today. Okay. So how was your weekend?
My weekend was great.
Yeah.
Yeah.
Okay.
And yours?
I worked, and then yard work and stuff when I got home. But so you and I both, we work in, multiple facets of insurance, right? So originally, I started out way back when as a life insurance agent with Northwestern.
Well, we all did.
Yeah, with Northwestern Mutual, which was great. I mean, the training program was great. Everything that I learned from them was great. Then I went independent, and I really focused on smaller life insurance policies, right? I focused on final expense insurance, right? Because a lot of people don't have, not only do they not have life insurance, but they don't have their...
they don't have $20,000 in where we are to
and people say, oh, it's not worth it, whatever the case may be. But I do see, for instance, my grandmother, my nanny, she had a small burial insurance plan, right? So that we didn't have to, go into our pocket,
right.
To pay. Not that we wouldn't, but it was just one less thing for us to worry about, right? So I started out in the final expense area. Started out life insurance, Northwest Mutual, moved into an independent agent, started really doing life insurance, but really focusing on final expense, right? Because I needed to pay the bills, right? And then my grandmother fell. We spoke about that. My grandmother fell. She had hip surgery, went into a rehab, and then I kind of found Medicare, right? And there's really a need for Medicare. And I was never really a health insurance guy, right? I never really focused on health insurance. But what I found was we always had that one spouse, right? Not always, but sometimes. We always had that one spouse that was kind of left behind, right? So like let's say the one spouse that got employee coverage was aging into Medicare, turning 65.
Right.
We always had that one spouse lingering behind, right?
Sure.
So I started working on the exchange, right? On the federal exchange and the New York State exchange. And what happens is, which is it's amazing, right? So for small business owners, right, people who really aren't W-2 employees, right? They 1099 employees, or they have their own business and they kind of set their own income, right? So there's some really great strategies where we could get them on an Essential Plan 1 or Essential Plan 2, right? And it's more or less free health insurance, right? No deductible, very little copays. On Essential Plan 1, there's very little copays, no deductible. Essential Plan 2, no copayments.
Right.
Again, for a small business owner who's starting out, and they need health insurance, right? Everyone should have health insurance because
absolutely.
In the blink of an eye, it could change. Life could change.
So
right?
that's the big question. Is it a right or a privilege?
Yeah. There is health insurance
absolutely.
for everybody, and people may
poo-poo the exchange,
and
ACA. These are all the same products.
It's all the same products. So, but then what I realized was, as your income is growing, right? So let's say you show very low income, right? You're just starting out, whatever the case may be. You're a student working part-time, Essential Plan 1, 2. Then as you start showing more income, now you're getting these tax credits, right? You're getting tax credits to kind of rebate your health insurance, right? But what happens is at the end of the year, as your income grows, right? At the end of the year, what are you laughing for?
Go finish. Yeah,
no.
go finish.
As your income grows, right? If you make over the amount that you stated, right? Now you're going to owe money. You're going to owe money in taxes, right? So it's not the right strategy. And then,
but it's not the wrong strategy.
It's not the wrong strategy. But then to top it off, if you are a medium income, high income earner, right? Now you're paying retail on the exchange,
right?
And that's a problem. It really is, because now you're paying retail on the exchange for really not inferior health insurance, but listen, they're
limited insurance.
Limited insurance.
It's only based in New York, downstate. Your network of doctors and hospitals.
So they're all HMO plans, right? So you have no no, they are. They're all HMO plans.
Right.
There's no. You have to stay in network, right? And the bronze plans is high deductible, silver plans $2,100, gold plans $600, platinum plans 0 deductible. So now you're paying like really high end on the marketplace, right?
Correct.
So, I write in 27 other states, right? In other states, there are options, right? There are other options for health insurance. But in New York State, what I found was I kept on hitting a wall. I'm like, why do I have to write on the exchange? Why do I have to write on the exchange? There's no other options. And then I kind of found these union plans, these gig plans, and they're really great. And most of them are discounted because they're through the union, they're through a gig or a third-party administrator. So you really have this huge group, right?
Exactly.
And now you have PPO plans.
So let's explain to the.
No, I'm just so more or less. That's how I kind of fell into. That's how I fell into health insurance, right?
Right.
How the hell did you go from New York life to getting into health insurance? Because health insurance is, I have to be honest with you, it's boring, right?
When
I get excited about it. Because
when I first got into the business, it really was, people were asking me. And so you don't want to leave money on the table. And then I realized for me, it was an easier sell than sitting down at a kitchen table talking to someone about life insurance when, if they didn't believe in it or they didn't feel that they needed to provide for their family, it's very, very difficult to convince someone when they're in that mindset. But health insurance, it's a business transaction. Okay, come in, boom, this was it. When I first started, there was like 12 insurance carriers. And so I really had to, you can never be an expert in any of them, but you were knowledgeable enough so that you can work with with your clients, and you can offer different plans. You can offer an executive plan, what we call the family plan. Then you can give a your basic vanilla plan to the employees. In New York State, terminology is it's a community rated. So that means whether I showed a plan, or if James showed a plan, or someone else showed a plan, as long as it was the same plan with the same insurance carrier, the rates are the same. And
there's no discount.
There's no discount. Whereas other states is age-based, gender-based, and then on large group, it actually goes through what they call claims experience. So they'll get all of the information from all the employees, and they figure out, okay, X amount of dollars was spent in healthcare. So you take a company like Apple.
Jonathan.
Yes. What?
How did you get into health insurance?
So I got. So that's how I got into health, because people were asking about it, and it was it was more enjoyable. You had other vendors, and they were soliciting me to get business, and I really I was providing a value, because most people didn't like doing health insurance.
Yeah,
most people do not.
Yep,
It's pushing paper. It's arguing. Every year you're dealing with rate increases. 3 to 8% this year, depending in some states, it's going to be close to 30% increase. That hurts. That really hurts, a small business. What I have found is that the businesses who provide and who can subsidize as much of the premium as possible have better, lower turnover. You could attract better employees, and the last thing you want is an employee to worry about health care.
And which is, we spoke about that our last episode, right? I had an employee who was working for me. I didn't offer health insurance because I had 10, 12, 15, 18, 20 guys depending on it, but I didn't have to offer health insurance, right? So I didn't, right? So Doug, asset to my team, didn't have health care, didn't have health insurance. Health insurance is available to everyone, right? All you have to do is go on the exchange, set up an account. But he didn't have health insurance, and that massive heart attack that he had because of undiagnosed high blood pressure could have been prevented had he had health insurance. So that's really why I'm passionate about health insurance, right? So I fell into it, but then you kind of tie everything in together, right? So I'm like, all right, so now we have health insurance for our clients, great. Now we start working with smaller businesses, because let's face it, we're all business owners, right?
Absolutely.
Whether we're solopreneurs, we have a small team, we need health insurance, right? Because of those little things, right? How many people, my uncle, for instance, my uncle Bill, he got diagnosed with cancer at 58 or 59. He didn't really have health insurance, so he didn't go for that colonoscopy.
Right. So early on, if you had a pre-existing condition, right, you had to, and you didn't have insurance, okay, you had to wait almost a year before you can get covered. Like defeats the whole purpose of insurance. So, so over the years, health insurance has evolved. So that pre-existing condition is no longer applies, but we pay for that, because now
guaranteed insurability.
It's guaranteed insurability. So we all pay for it. New York State is community rated, as I mentioned. So there's no underwriting. As long as you can fog a mirror and you're on a payroll, and you can show that there's income being made, then you can get insurance in New York State. But it's a qualified plan. That's the other key word, qualified, meaning that what you do for one employee, you have to do for all. But you can class out, not to get too technical, but you could class out and give like the higher executives or the key executives and family members a different, more robust plan.
So that's an executive carve-out,
That's
right?
an executive carve-out, correct.
Let's say you have your corporate team, right? So your corporate team could have one plan, right? And then you could have another plan, for really
Rank and file.
rank and file. That's a nice way to put it. I was going to say something else, but that rank and file. So yes. So health insurance, right? So we have the exchange-based plans, right? We write in 27, 28 states throughout the country. Either myself or you, or combined. I would say 27, 28 states. So we have the federal exchange, right? The federal marketplace. But there's certain states that don't, that aren't a part of it. They think they're special. New York being one of them. So not only
Which is good for the participants from a health insurance.
It is.
You want to be in New York and have health insurance.
So now we have to get recertified, not only in the federal marketplace, but now we have to get recertified in the state marketplace as well, which is fine. So there are plans, again. So you have your essential plans, right, for your lower income, which is like a step above Medicaid. It's like a Medicaid blended plan, but no one really likes Medicaid. But it is.
They don't like the term Medicaid.
They don't, but it's not a Medicaid plan. It's just subsidized by Medicaid. So.
You get a Medicaid card.
No, you don't. Not for the essential plan.
No?
No.
Okay.
If you fall below the federal poverty line, right, then you would be on Medicaid, right, and then you would get a Medicaid card. But no, not for an essential plan. So you have essential plan 1, essential plan 2. Then we have, our health insurance where you
Can I tell a funny story?
Sure, absolutely.
So my wife got referred to see this doctor in the city. Probably shouldn't be sharing this, but it's funny. And
Jamie already gave me the heads up. She's like, you're not allowed to tell stories.
Right, it's all right. But so it's my wife. So we make the appointment. I'm talking to them about insurance, and she goes, "Well, we don't take your insurance," which is a problem in all states, basically. And I said, "Okay." I said, "What do you take?" And she says, "Well, we take Medicaid." And I said, "Okay, well, what do you have to do to qualify for Medicaid?" And I'm sitting there.
Did she say Fagamira?
What was that?
Did she say Fagamira?
Fagamira? No, and I'm sitting there, and the amount of money, and I'm sitting there, and I'm trying to figure out how can I get down to that level. And I said, it's not going to happen. And then she said, well, he does accept, private pay for the consultation. And I said, fine. And then my insurance carrier ended up reimbursing me for it anyway. So go figure.
Oh, you must have good insurance.
So, well, no, they said at first, they said no, and then I got a check back for the different, for the consultation. So I paid a $50 copay. Go figure. So, but in any event, I just thought it was a funny story.
Yeah. So that is a very funny story.
So sometimes Medicaid is better than traditional.
Yeah, listen, it all depends. There's an ass for every seat, right? There is, right? But we work with everybody. I mean, we'll work with somebody who needs help.
Absolutely.
Getting on the exchange, right? Figuring out if there's going to be a tax credit. Figuring out if they're eligible for an essential plan. Or if they could do a Medicaid plan on the exchange as well. So we work with everybody. And then for the people who make above the federal poverty line, right? We have other qualified plans, right? So we work with everybody. We're not prejudiced. I love helping people. And to be honest with you, we don't get paid to help people with Medicaid,
No,
to help
we don't.
people on the exchange. We don't. And the reason why we do it, and it's super important, because it's hard to navigate. It really is hard to navigate. There's a lot of questions, and there's a lot of minutiae. That's your word, which I've been using a lot lately. There are a lot of minutiae that people don't know about, right? Because, like, for instance, when you put your income in, if you have any deductions, you take that off of your income.
Correct.
When you're building your income profile on the exchange.
Correct.
So now your income's down. For instance, you're contributing to an IRA or not a 401k, a KEO, right? A KEO.
Right.
A KEO. So you could write off your
auto expense.
No.
Okay.
As long as you're taking it off on your tax return.
Right.
So mortgage interest, for instance, which is now and property taxes, which is now up to 40,000. What'd you say?
I said, thank God.
Oh,
But
so the administration did do something right?
Oh, we'll see.
All right, we're not talking politics. We're not talking politics. But there are plans for everybody, and we have these health insurance plans. So if you're not eligible for a tax credit or the essential plan,
but you still want a more comprehensive plan.
Yeah. So we have union plans.
We
right?
have these union plans.
So we work with a third-party administrator, which gives us access to a bunch of different union plans, right? And so what happens is now with this third-party administrator, so if you're an individual, right, you don't have health insurance.
So when I first started out, if you were a solo practitioner, you couldn't get health insurance
unless you got it on the exchange.
And you paid a lot of money, and for horrible benefits. Mm-hmm. It was terrible. So we've come a long way.
Which is nice because you have those. You have mortgage brokers. You have real estate agents, right? You have people who are 1099 employees,
correct,
right? Insurance agents, right?
And they still have a need.
They still have a need. So what's nice is we have options for them, right? So we have these union plans, and through a third-party administrator, we're able to give them access to a union plan, right? So, and more or less, they're joining an association, right? And now they have access to these union plans, which is nice. Then we have these gig plans, which are really they're health. I don't know how to explain it. You have to do a survey. You have to do a medical survey every month. And again, through an association, a third-party administrator, you have access to this huge group health insurance plan. And we do the same. Well,
and this is a network, a nationwide network. So these are people throughout, all 50 states. Puerto Rico, right? And maybe Guam.
I don't know about that. Let's just stick with Puerto Rico.
But we'll stick with Puerto Rico.
Yeah.
And what's great is that, as James is saying, they create these groups with lots of participants. Therefore, premiums are a little bit lower, but more importantly, the benefits are a lot more robust.
So for instance, $1,000 deductible plan is versus the marketplace where you're paying high-end retail is substantially less. I would say probably $400 a month on average less. So you're saving $4,800 a year. That income is substantial. That savings is substantial. So we have access to those plans for individuals, right? And then I started working with individuals, and I said, wow, I could get some of these groups in these plans, right?
Exactly.
So then we started writing, groups, because now we're saving groups money, because let's face it, United Healthcare Oxford, right? Right? United Healthcare Oxford, Emblem, again, retail. You're paying retail. And
very expensive.
It's very expensive. And those plans are only available to groups of 3 or more, right?
2 or more.
2 or more, right?
And
but you need 2 people. You need 2 people enrolled in a plan.
You need 2 people enrolled, and they can't be living in the same household.
Yeah. So that we're not restricted anymore, right? So let's say we have Joe's hardware store, right? And he's he wants to insure him and his family. Like now we can. And what's funny is they have on the marketplace, right? They have an area for small businesses, right? And it's supposed to be like affordable. It's not affordable. It's really not. When you look at it, you're like, I ran the numbers. I just ran the numbers. Not that I work on that. I think it's CHOP. I think it's called, right? CHOP. No, it's a CHOP. CHOP. I think.
No, SHOP.
I don't think it's SHOP. I think it's CHOP. All right, whatever.
We'll
get back to you next week. But I ran the numbers, and I was like, I'm like, this is like, because I figured it would be discounted. It is not discounted.
And the networks are smaller.
Yeah.
And, so certain areas it has a stronger network than other areas. Like if you're in Manhattan and you live in Manhattan, not going to work.
Yeah. So we have plans available to everybody, right? Whether you're on Medicaid, low income, just starting a business, your employer doesn't offer you health insurance. It's a small, they're a small company. And if your employer doesn't offer you health insurance, call us and we'll meet with him. But there are affordable options, right? So let's dig in. And small group, large group. I'm working with a group right now, 6,000 employees, right? I worked with a group last week, 80 employees. So I worked with a group, 6 employees. I worked with just a small doctor's office. You're working with a doctor's office right now with a ton of employees, right? So let's just break down health insurance, right? So you have your premium that you pay every month, right? And then what's a deductible?
Well, deductible is the...
I used to get confused. Before I did health insurance, I really was like deductible, co-insurance, co-payment, cost sharing. Like I was so confused. There's so much that I didn't know, and there's so many terms that most people don't know.
They don't understand.
So let's start with deductible.
Simple. Deductible is very simple. It's the amount that the patient is required before to pay before the insurance carrier pays. However, it's not what the doctor charges. It's all about what's the negotiated rate. So a perfect example is, you go to the doctor and he will submit a bill for $600, right? You would freak out when you see it. But when you get the EOB, explanation of benefits, from the insurance company, you'll see he billed for $500, but X amount of dollars was disallowed. I love that. And then, boom, patient responsibility, $48. And that's all that you would be responsible for, and then he would then bill you, or she would then bill you, the office, and then you're responsible for that $48.
So most of the premium that you're paying, the premium is your monthly payment, right, for health insurance. So the higher the deductible, the lower the premium, right?
Correct.
And then the lower the deductible, the higher the premium, because that's more money that
inverse related.
Because it's the more money that the insurance company is going to have to pay, right?
Correct.
You could have a plan with no deductible, right? So back to the deductible. Are there any services that you're eligible for prior to that deductible kicking in? So are there any services that you can get prior to your deductible kicking in?
Yes. They're part of the Affordable Care Act was that you are entitled to a yearly. I'm blanking out. What's it called?
Physical,
and with a healthcare provider. So they go over basically your vitals and some other things. Which is great.
So
start
your annual physical, blood work,
basic blood work,
lipid
panels,
but also it also states anything preventative and wellness, right? So
Correct.
Your colonoscopy, right?
Correct.
Your mammograms, your annual female office visits.
Felicia.
Yeah, definitely. So we actually did a whole podcast in pure mammography.
Okay.
But so mammograms, colonoscopies, your annual feminine visit, right? So that's all. So anything preventative and wellness is covered prior to your deductible kicking in.
Correct.
With no copayment.
With no copayment. But
that doesn't mean the doctors aren't going to try.
Well,
to get a
they're going to
copayment.
throw in a test or something that's obviously not covered by that's not part of the wellness visit, and there may be a patient responsibility to that.
So those are our services, right? And then outside of that, let's say you meet your deductible, right? You have copayments, right?
Correct.
So that is your portion of your health care.
So there's co-payments, and then you got, so a co-payment, sometimes, like just visiting a doctor, and again, this is where each of these plans are a little bit different. Some have co-payments, some, strictly...
And some co-payments, again, as the premium goes up, those co-payments go down.
Can go down, and there may be more that are covered under a co-payment. So like if you went to see, I don't feel good, visit with the doctor, I got a little achy, fever, whatever, sore throat, okay, there may be just a copay, a co-payment, and it may not necessarily be applied to your deductible.
Well,
may not.
Most of the time, it is. Like, so for instance, some plans on the exchange have one office visit outside of wellness, one specialist visit, one primary care visit, one before your deductible has to be met.
But keep in mind, it's not what the doctor bills. So it's a routine, I don't feel good office visit is about $60, $65.
Well, it all depends on the plan.
Sure.
I mean, it all some have a $25 copayment, some have a $40 copayment, some have a $10 copayment. It all depends on the plan that you're on and the premium that you're paying, right? So, and same thing with specialists. Some specialists are 30, some are 50, some are 70, some are 90. I mean, again, it all depends on the premium, right?
Right, and basically, and the difference is that how much is the insurance how much are you essentially self-insuring yourself for?
Exactly. So, but those co-payments also aren't just for primary care visits and specialist visits. They also roll down, the summary or the explanation of benefits, not the explanation of benefits, the summary of benefits, right? So you could have co-payments for labs.
Right.
You could have co-payments for imaging, right? X-rays, CAT scans, MRIs, PET scans, right?
And then, and also going into urgent care.
Urgent care, ER, ambulance, right? So you would have co-payments for all of those things, right? Hospitalization, outpatient surgery, inpatient surgery, right? So there's co-payments for all of those things. Now again, there's another term, right? So co-payment is a flat fee,
correct,
that you contribute to your health care, right?
To the care that's being given.
To the care that's given. That's a flat fee. A co-payment is a flat fee, right? Now, there's also a word which I used to get confused by, coinsurance.
Coinsurance.
So coinsurance is now a percentage, right? So most of the time, you will have a co-payment for primary care visits, specialist visits, right?
Correct.
Now, most of this is premium based, right? So if you have a lower premium, right? Sometimes you don't have a co-payment, you have coinsurance when it comes to hospitalization, outpatient surgery, maternity.
But the caveat is after you satisfy
your deductible. After you satisfy
and
your
then
deductible.
all plans will have a maximum out of pocket.
Yes, which is another term. So coinsurance is a percentage. So for instance, if you were on a plan that was heavily discounted, right, you could have a coinsurance. Instead of a co-payment, you have a coinsurance for hospitalization and outpatient surgery. So most of the time it's 20%. Some it all depends. It could be 50. It could be 50. However, now people are like, oh my goodness, that's a lot of money. It is. But you got to remember, if you're saving $5,000-$6,000 a year on premium, right, and you have to pay a couple $1,000s for co-insurance, it's not limitless, right? It's not. There's a cap, and that cap is called MOOP, max out of pocket.
Maximum out of pocket.
M-O-O-P, maximum out of pocket, right? So you are protected. So your maximum out of pocket could be $9,000, $9,200 per person, well, for an individual, and then $18,000 for a family or a husband, spouse, or employee spouse.
Two plus family unit.
So
that's a lot of money.
There are so many different terminologies, and there are so many different variables. That's why it's so important. And listen,
and then don't forget about the drugs, but okay.
Yeah, like drugs.
That's another discussion.
So, yeah, exactly. Because listen, let's face it, these insurance companies are changing. I heard there's a big thing with injectables going on for 2026. None of these plans want to cover injectables. What are they? GLP-1s?
GLP-1s.
GLP-1s. So There are so many different variables. That's why it's so important to sit down with somebody that you trust, right? Somebody that's knowledgeable, someone that's not going to steer you in a direction that benefits them. And that's not us. We don't do that. We do what's, so many times I'll sit down with a client who has the checkbook or credit card in hand, ready to enroll in a plan, and I'm like, wait a minute. You're eligible for the exchange.
Right.
You're eligible for an essential plan. And we could potentially save them $12,000 a year.
Absolutely.
Perhaps more. So we always do what's right.
And the other
for
thing
our
about the
clients.
exchange, and James and I may have a little differ on this, is that I do believe that the exchange is better than most people think. It's a New York State plan. Look, all plans cover for emergency care. Because it's not like, hey, I'm in Pennsylvania, I'm skiing and I break a leg. It's not like, I got to get back into New York and
No, you're right.
You go to the hospital and it's covered. Now your emergency benefits will apply, and then at some point you'll be brought back to New York to have your future care. But the point is that it's not bad. Far better than most states, and I'll just leave it at that.
So pretty much this is health insurance,
Right.
101, right? So it's a little bit of our story of how we both got into health insurance, the different plans and options that you may have, whether you're an individual, small group, large group, there are so many gamuts, right? There really are. And we cover them all. We try to,
right.
at least. And if we can't help you, we'll tell you we can't help you. So any questions regarding health insurance, any questions whatsoever, call Safe Haven Insurance, 631-608-1137. Ask for Jonathan Silberstein or myself, James Donnelly. Check out our website, safehaveninsuranceagency.com. Again, if you see any value in this video, please like, subscribe, and share, really, because that's how we grow our ratings.
And we grow our practice.
And we grow our practice, ultimately. So next week, we have an exciting guest. We have Iris Rivera coming. So she's going to be here next week. She's our HR consultant. We saw a value on bringing her on the team because we work with a lot of companies, right? Whether it's a mom and pop company or small or large companies, and a lot of times HR falls between the cracks, right? And everybody thinks that they're compliant, and they're not. Because let's be honest, how many small businesses can afford an HR department?
Right.
How many small businesses can afford, to make a decision that will cost them a fine with the labor department? Because let's be honest, the labor department is not pro-employer. So that's our guest for next week. We're going to touch on that. We'd like to touch on some other topics next week, but really I want to bring Iris in just to kind of give you the basics of HR. Thanks so much for watching, for listening. I appreciate it.
And then
Thanks,
just
Jonathan.
one quick thing, and if there's any topics you would like us to, to
drop it in the
discuss,
comments.
Absolutely.
Definitely.
We appreciate
Thank you so much. Again, I want to thank our sponsors, David Gussin, 516-631-ADS, Jimmy Caraco, Smash Hit Media, Cliff Flager, BXB Pro Connect, right?
No, it's bxppros.com.
bxppros.com. And again, to our production team here, Craig Escobar at Web Growth, Alec Gambino, and our video and audio guy, Pratik. All right, guys, have a great week, and we'll see you next week.